With markets like this, it seems like it doesn't matter what we buy. Pretty much everything is down, at least on the weekly timescale, on the monthly timescale. But there are some assets that are down more than others. Everything is red, and when Bitcoin is going down, then Polygon Matic is going down as well. But here's the thing, we are looking at the long-term developments, right? We buy an altcoin in order to outperform Bitcoin and Ethereum. We want to get more return by taking on more risk. And so that's why I like relative valuation charts so much, because we've got opportunity costs. We can either buy Bitcoin or we can buy POL. And if you decided to buy POL instead of Matic in February of 2023, so roughly 2 years ago, you'd now be down, relatively speaking, by almost 96%. You'd have more than 20 times the capital had you decided for Bitcoin over Matic. Now, I very much hope that this is not the first Polygon Matic video that you're watching on this channel. I published one 186 days ago, the Polygon Matic Dev, another one 174 days ago, the Polygon Matic Collapse, another one followed, Polygon Matic Cannot Recover, here's another one, the downfall of Polygon Matic. And that is why I believe this crypto channel is different to others. I try to be as objective as possible. If I don't like a cryptocurrency, if I think the tokenomics aren't worth it, if I think the valuation is too high or the adoption isn't there, then I will say this openly, despite some people not liking that message. So if you appreciate this, feel free to give this video already a like, potentially also subscribe. But let's go on. Let's have a look at Polygon Matic's valuation. So the POL token has a market cap of 1.8 billion, and we've still got a few Matic tokens that aren't yet converted. So in sum, we've got roughly 2.2, 2.3 billion that's in the Matic ecosystem. Is that fair? Let's compare this to Arbitrum, for example. That's got 1.5 billion in market cap. The trading volume on Polygon Matic in the last 24 hours was 85 million. The trading volume on Arbitrum was almost 10 times that. So even after this massive decline, Polygon is still a multiple times more expensive, relatively speaking, if we just look at trading activity. But what about capital? So there's currently $681 million in Polygon on the blockchain, and Arbitrum has 2.4 billion. So that's roughly 4 times more. And again, the market cap of Arbitrum is roughly only 70% of Polygon, but there's more usage and there's more capital. At one point, Polygon Matic was way larger. Have a look at this. This is the total value locked development over time. There was the DeFi summer, and at that point, Polygon Matic's total value locked peaked at 10 billion. So that's now down by roughly 95%. Now relative valuation charts like this start to make sense, right? Why Matic is doing that poorly versus BTC. But it's not just the usage of the blockchain, it's not just the capital on the blockchain that's a problem. The reason why POL and Matic is going down, those two tokens, by the way, are one-to-one linked, right? They can be converted. The reason why those things are going down is because the tokenomics have been changed to the worse for the investor. So this is how initially the Matic tokenomics were sold. It appeared as if there's only ever going to be 10 billion Matic tokens, and then things are just stable. But then came the conversion to POL, and suddenly Polygon Matic became an inflationary token, and that was a loss of trust that the team could never recover from. It's not like the Matic ecosystem has already died. It's simply just fizzling out slowly over time. So on the left, we see the number of transactions over time for the last year. It peaked at around 5 million. Now it's at 3 million. On the right, we've got the number of wallets. Light green are the senders, the dark green are the receivers. Again, we see how the ecosystem rather tends to shrink. And the reason why the ecosystem shrinks is because the users are not sticking around. So have a look at this. This is the Polygon cohort retention. And after 12 months, only 3.7% of all wallets are still active. So after the first month, more than 80% have already churned. After 12 months, there's only 6.7% left. That's why the ecosystem is shrinking. You can try to grow really quickly. That growth halts when most of your people leave that quickly. It's actually quite sad because during the presidential election, there was quite a bit of adoption of Polygon. There is Poly Market, right? This is the betting platform to bet on the outcome of the presidential election. And now the market has shifted its focus. A lot of people made money betting on Donald Trump winning the presidential election. So this is now the total value locked of Polygon Matic, the betting platform. After the election, a lot of that capital left the platform again. There's still a bit of fizzling activity. That activity is related to sports betting. So this is now the top most liquid bets on the platform. Clearly, the overall situation in crypto has changed recently, and there seems to be one event that started it all off. What we've got over here is the Bitcoin price, and this red circle marks when Donald Trump launched his meme coin. So that's this over here. Most people got burnt with that meme coin. If you bought this in the first few hours after launch, you made money. If you didn't, you lost money. Since the launch, Bitcoin lost 21% of its value. Of course, the Trump token lost much more. A lot of other altcoins also lost more. And so the majority of people lose, of course, when the market looks like this. There's pretty much nobody that has their entire crypto portfolio in Maker or in Bearer or in Bitcoin Cash. Even if you hold those tokens, you probably have a diversified portfolio and you're down with all of those other tokens. Now here's something that's not so obvious. We see Bitcoin over here. Bitcoin went up by 14% in the last year. And this is now the top 100 ordered by their performance in the last year. And there are a few altcoins that did better than Bitcoin. Two of them being gold derivatives, so PAXG and Tether Gold. But there's also others that performed slightly better. But the vast majority of altcoins actually performed much, much worse. If you picked a random altcoin in the top 100 1 year ago, you've got roughly an 80% chance that you underperformed simply Bitcoin. And that's of course a problem, right? Because altcoins have more risk, and so in theory, they should also perform better, especially during times when Bitcoin tends to go up. And so I don't try to find the needle in the haystack. I don't try to pick the bearer coin in order to then make money. I do the exact opposite. I bet on the vast majority of altcoins doing worse than Bitcoin. And most of the time, that strategy makes money. Have a look at this, for example. This is Matic relative to Bitcoin, a very constant underperformance. Or this is Balancer relative to Bitcoin. Again, a very constant underperformance. And we can make money from that relative valuation. We don't have to bet on Balancer or on Matic going down versus the US dollar. We can bet on it doing worse than Bitcoin and make money when this thing continues to go down. Or we can also mirror that chart, right? We can just bet on this continue to go up. This is now Bitcoin relative to Matic. That's the logarithmic chart. This is the linear chart. So why does this happen? The reason is tokenomics, right? It's the altcoins that print more and more tokens, and that token allocation goes to the insiders, it goes to the developers. And for meme coins, we don't necessarily have an expanding supply, but for meme coins, we tend to have a lot of ownership by the insiders as well that simply sell off over time. And that's why Bitcoin performs so well versus all of those altcoins. And that's why I believe those are the kinds of charts we want to bet on. Yes, we can of course try to time Bitcoin itself, and we can try to buy this at 16K and then sell it at 100K. And this is a possible way to make money. I'm also trying to time Bitcoin. But why would we try to pick the few altcoins that perform still okay? Why not just flip this thing around and make money when those bubbles are red? So for example, over here on the 6th of December, I have made a premium update video how I have sold some of my Bitcoin because a liquidity crunch was incoming. So that was over here. I've made another announcement on the 25th of February how I've sold all of my speculative Bitcoin and how I'm selling all of my altcoin positions. And that was over here. I opened a position betting on falling prices of Chainlink on the 23rd of January. I opened a short position on Dogecoin and on PancakeSwap on the 14th of February. And the reason why I'm sharing this is because I've now closed the Chainlink position, so it lost 42% in the span of a few weeks. I've also closed the Cake short, which went down versus BNB by 27%. And I've also closed the Dogecoin short, also in profit. So really, when you know what you're doing, if you know how to do the proper risk management, that you don't get liquidated, and when you have the odds in your favor during times like this, when most altcoins underperform Bitcoin, then it is rather straightforward to make money like this. We don't have to find the needle in the haystack. We don't have to make 100x returns with a random meme coin. We can simply just let our capital compound by making 20% here and 40% over here. Most people are scared of betting on falling prices. But that's why I've made dedicated tutorial videos on the topic, how to do the proper risk management management, how to set up those positions also in DeFi and Web3, not just with centralized exchanges, how to do this cost efficiently, and also how to select the right assets to short. There's more than 100 tutorial videos in total in premium. The link is down below. It's thebitcoinstrategy.com. Of course, I'm also sharing in detail how I currently see the market. There's a premium update video every 3 to 4 days. And I challenge you to look at other influencers, what they said during those times, right? Have a look at the date, have a look at the title of those different premium update videos, and let me know who said already on February 18th that it might make sense to bet on falling prices, or that crypto stopped expanding in the last 2 to 3 weeks, or how your influencer is selling aggressively. I don't really see many other influencers saying it like it is. Most YouTube channels just sell hopium. Most YouTube channels just want to push up their own bags, but they're not really looking realistically at the prices. They're not really looking at how much are people actually already in profit and when will that profit be taken. So if you appreciate during times like this that I keep it real, then of course feel free to give this video a like. Feel free to also subscribe. I publish videos regularly, and of course feel free to also check out premium. The link is down below. Looking very much forward to seeing you there as well. Cheers.